Hi, everybody. John Haldy here with Haldy Tech, and I'm excited to have Steve Crawford back for part 4 of our series for becoming a Linehaul contractor. Steve, welcome.
Good. Hello. Good morning. Good to be back.
For those who don't know, we've been doing a series now that cover a bunch of topics, and today's topic is going to be all about insurance for the business, specifically, not employee insurance. Steve is a very successful longtime FedEx ground line haul contractor, and he's been super gracious about volunteering his time, treasure, and talent here to share it with everyone. And that's basically what we're trying to do with this video series, is to help folks learn and to share what they're doing. So as a reminder, we've already gotten some great feedback, and the reason we're doing today's topic on insurance is because a bunch of people asked about that. If you have things you want to hear about, please reach out to Steve or I. Our contact info will be here in the video and below in the comments, and we'd love to hear from you so we could shape what we do next to try to teach you and help everyone become better at what they're doing. Steve, I know we've done the bios before. With your permission, shall we skip the bio and dive into the meat and potatoes, or would you like to tell everyone a little bit about yourself today?
I've been in trucking for a long time. If you cut me open, diesel fuel will come out. So I don't want to be a self-proclaimed expert. It's just I've been in this industry for over 50 years. It's been good to me.
Awesome. So Steve, we were chatting about topics, and we got an email from someone to talk about insurance, and you said right off the top, oh my God, just the business insurance, there's 7 primary ones that you can think of. And I wrote it down, so I'm going to read this: primary liability, non-trucking liability, NTL, physical damage, cargo, workers' comp, employer's liability, and general liability. Did I get that right?
Right. Well, and then actually we could even, the employer's liability sometimes is a subset underneath work comp. So we do want to address it. But then another one is having an umbrella policy. So we can cover that too. So, yeah.
Okay. So let's see if we can try to cover all of that. What we're not going to do, though, is talk about medical, short-term disability, long-term disability, life insurance for drivers, vision, dental. We'll save that for another conversation because that's a whole other topic.
Correct.
All right. So from the list of the big 7 or 8 there, where should we start? Because I don't know a darn thing about this, and I'm hoping you're going to teach me and teach everybody else listening.
Well, I think a good thing to do would be to start with the at the infant stage, the beginning of the trucking industry back, say, well, it would have been the 20s and 30s, but the Interstate Commerce Commission, I think, was formed in around 1935. I know some of these things because my dad was an inaugural member of the Teamsters Union in 1935. And so you've got this brand new industry because everything was going by rail and horse and buggy. And now you've got these trucks on the road, and there's accidents and things like that, and people going across state line and infringing on this, that, and the other thing. And whether we like it or not, we sometimes come up with, well, let's get the government involved. And so we did. And so the Interstate Commerce Commission regulated exactly what it said, interstate commerce. And that definitely, fell into railroad and other types of things, but we're mainly just talking about trucking here. And, if there's an accident on the highway, somebody's got to be responsible for it. So they made it, if you're a trucker, you have to register, and you have to have a certificate of insurance on file, and that's the primary liability. And the numbers back in those days were, crazy, $250,000 coverage, then it went to $500,000, $750,000. Now mandatory coverage might be $1 million or $2 million. And I alluded before, you can get excess coverages, might fall into that umbrella category, whatnot, of a million, multiple millions of dollars. But the primary liability is that what happens if you bodily injury or death or damage somebody's property. And so for FedEx, and some of this, being able to separate it, what it means and why we're doing it, might even help the existing contractor. They just know that, hey, I got to go buy this insurance. Well, the primary liability is what the carrier, the person that has the DOT number, that's what they're supposed to provide. FedEx provides that. We do not have to buy primary liability coverage. Also, cargo insurance. That was something, hey, you're hauling something for somebody back in the 30s and it was damaged, truck burns up or something like that. Oops, sorry. Then cargo insurance entered into the equation. FedEx has the cargo insurance. So we are not responsible for that. But I think it's important that people understand that those two coverages do exist.
When you say FedEx has them, so again, I'm going to role play here that I am about to buy 3 routes from someone, my first 3 routes. I don't have to go out and get primary liability or cargo coverage. FedEx is getting that on my behalf.
Oh, yeah, well, they already have it on. They have it like a blanket policy, whether they've got 1 truck or 10,000 trucks, they're covered.
Now, do I pay FedEx something for that, or is that baked into what I get paid, that they pay me less?
And again, a lot of people talk about, well, the rates on the open market are better. Yes, but you would have to go buy your own primary liability coverage. So the fact that FedEx has that coverage is factored into our rate. Now, contractually, we'll just bring this up. We could spend all day talking about it. Contractually, there's some things that happen. If I have an accident or whatever, FedEx can come back and deduct from my settlement and make me pay it. That's not a statutory insurance requirement. That's just a contract requirement that I'm indemnifying them against certain things.
Can I call FedEx and say I want to raise my liability limits, or is it just set?
It's just set.
Okay. Do I want to have insurance above and beyond what FedEx is providing me for liability?
Well, yeah, there's some of that is subjective, that because the lawsuit is supposed to go against the person that has the primary coverage. We're living in such a litigious society now, though. I think that's one that I'd like to even do some research on. What would happen if there was a loss of some type and FedEx was sued for $10 million, but they sue me or my company as a co-defendant or something like that. And the judge or the jury decides that, okay, well, it's 90% FedEx and 10% Crawford. Well, FedEx can write out a check for $9 million. I can't write out a check for $1 million. Is that an insurable risk underneath the primary liability coverages? We would need some insurance experts to answer that for us.
Okay, but primary liability and cargo, if I'm a new guy, I don't have to go get those, but that leaves 5 or 6 other things that we talked about. Dumb question. Am I looking for one insurance agent who's going to sell me all of those, or am I looking for 5 or 6 or something in between?
My personal experience is that if you get a good agent that understands trucking, and if they understand trucking, they're going to understand work comp, because every trucking company around, pretty much of any size has employees. If you have it all in one place, all your renewals are managed. Yeah, technically you could go out and buy coverage A from this agent, coverage B for that agent. But just like our own personal insurance, a lot of times you have your house and your cars bundled together with one agent because you get a discount. This isn't so much about discounts. It may be a little bit, but a big part of it is just the convenience of having to deal with one person, one bill, as opposed to, I'm big on reducing the amount of administration work. I don't want to chase paper.
So what's NTL, non-trucking liability?
Non-trucking liability. Well, as we said, there's the primary liability. So I, as Joe Blow trucker, buy a truck and I'm going to lease on to some trucking company somewhere. It doesn't even have to be FedEx. I'm going to lease on somewhere. And that became very popular in the 40s, 50s, 60s, and 70s. There were a lot of people, we still have them today too, but a lot of people went out, got one truck and drove it themselves. So when they were hauling something, primary liability coverage. But what happened if, it sounds crazy, but you might take your truck down to the store, or like in our case at FedEx, we have our truck parked at the FedEx hub, the FedEx station, whatever, and we drive it to a dealership for warranty work, for oil change, repair work, to tire shop to get tires put on. We are not under dispatch. We're doing that on our own. That's what's called non-trucking liability. Some people refer to it as bobtail insurance. That's a little bit deceptive. Well, it's not so much as deceptive, it's the wrong use of that term. Bobtail means when you're driving with no trailer. Well, if I'm in Indianapolis and FedEx says, I want you to bobtail to Louisville, they've dispatched me there. If I have an accident, I'm underneath their primary liability. But if I'm just going to get tires rotated on my truck or something like that, or replaced on my truck, then I'm on the non-trucking liability.
So when you're doing that, when you're taking a truck out of service for repairs, maintenance, whatever, and you're going from the terminal off to somewhere else, FedEx's liability does not come into play.
It's not supposed to now. It ends if they get sued and the lawyers do this, that, and the other thing. You and I can't speak to that, but the non-trucking liability is supposed to cover the events when we're not under dispatch, pulling a trailer, loaded or empty, or when we are performing service at the direction of FedEx, they are controlling us, so to speak. They aren't controlling me when I go to the tire shop, wherever it is, the dealership, anything like that.
Okay. And physical damage?
Physical damage is anything that happens to the truck itself. You hit a deer, you run off the road and run into a pole or something like that. You got damage to your truck or whatever. Physical damage is covered. In your car, you call it collision insurance.
Okay. And FedEx doesn't cover that. That's on you.
No.
Okay. So separate from employer's liability, then we have general liability.
Right.
And what's that about?
That's going to be more for, say, the public. Example, I have a truck broke down on side of the road, and I go out there with my pickup truck, and I'm helping with something, but my pickup truck, we hit something or did something, that's general in nature. Again, I've got, liability insurance, collision insurance, physical damage, whatever you want to call it on the pickup. But when you have a liability exposure, some of us have offices. I used to have a shop and an office and a whole bit. Okay, so you have somebody, John Holiday comes to visit me and sell me something, and he falls down the steps. Well, that's not a collision event that the primary or non-trucking liability would cover, general in nature.
Okay. And then am I correct in thinking that umbrella is like umbrella that I'm familiar with, where it's like everything else? If it's the catch-all, whatever happens, they're going to defend you.
Yeah, and again, it's so important to have a good agent on this because I've had umbrella policies on my corporate account, corporate policies, coverages, whatever, and I've also got a personal umbrella. Because that it could be something that's not related to work. Back to the example of even the general liability. I have my office in my home. Well, what would happen? You have an employee come over and he falls down the steps in your house. Well, okay, is he going to sue you under your homeowner's insurance, or is he going to sue you because of work? That's where a good, and see some of these, what you can get and how it applies will vary from state to state. So somebody in North Carolina or Alabama may have different state requirements than what's in, say, Missouri or Kansas, Iowa, whatever. Can't say it enough. Have a good agent
Who understands trucking, because the first question that comes to my mind is, all right, if your business is in Georgia and you're working out of Marietta terminal, but your drivers are going to Alabama and to Mississippi and to Tennessee, how does that all come into play in terms of where things happen and how the rules apply, all that kind of good stuff, right?
Right. And include, your liability coverage is your liability coverage, just, the application of it, because if you're leased onto FedEx or you're leased onto any carrier, you've got your own DOT authority and you're trucking and you have an accident in Illinois or Kansas or something like that. Your coverage doesn't expire or stop when you cross the state line. Just how claims are handled and what is, like what the insurance company writes into the contract may have different riders in different states based on where you live, not where the event took place.
So I've been watching our list as we've been talking workers' comp, and I know it's a big topic because, for example, at the Linehaul Summit, there's an entire session devoted to workers' comp alone. What do we need to know as we're getting started as Linehaul contractors about workers' comp? What are the key things to take away as you start to go looking to get workers' comp coverage?
Well, again, going back into history, if we can, guys were getting hurt at work, and this wasn't just trucking. This is probably, the steel mills, auto mills, whatever happened. Guys were getting hurt. Oops, that's too bad. It's like, no, wait, a guy got hurt at work. His injury should be covered. If it's a disability, he should have something. And so to protect the worker is why workman's compensation is what it's called. It's compensation for the workman. And of course, that's today you'd have to say the work person to be politically correct. But that coverage was to take care of the employee for events that happen at work. The state controls that. For example, work comp insurance premium is determined as a percentage of your payroll. That percentage is way higher in Illinois than it is in Missouri, for example. And also, there's some states I've heard that there's six. Two that I'm familiar with, Ohio and Wyoming, are what they call monopolistic states. You have to buy your work comp insurance from the state.
Okay.
And so the operation I have in Ohio, we have a policy with the Ohio BWC, Bureau of Workmen's Compensation. When I was out in Wyoming, same type of thing. And, so they determine their own rates. But then the other thing that applies is your experience. And there's if you haven't heard of this before, be sure you check out what is your experience modification. They'll call it experience mod. What it does is modify the premium. If you're right, and they base the mod based on insurance company brings in $100,000 of premium and they paid out $80,000 worth of claims. They made $20,000. They got their administrative fees and what in there. Your mod next year might be 0.95 or 0.97, which means you're paying a little bit below the rate because you got a good experience. Also, all of a sudden, man, you got a bunch of injuries, a bunch of stuff going on, and they had to pay out a lot. Now you might be 1.07, 1.12. I talked to a guy last week that's 1.3 on his experience mod because he had an injury that somebody else was responsible. It's being litigated and all that, but in the meantime, it's costing him on his work comp. Myself personally, I've been at a 1.15 and I've also been at 0.87. So okay. Up and down, up and down.
So it's kind of like a credit score in that way. They're looking at how
somewhat, yeah,
in keeping people safe.
Right. So, and then, and with one of our intents of this video series is to help people that are just getting into this business. If you're buying an existing company, there are insurance companies out there like, well, if you're taking over the XYZ routes, we want to know what his loss runs were because they're going to figure that you've got the same exposure that he had. I was very fortunate, again, in Ohio, the fellow that I purchased back in 2013 had a really low rate, and we've had really low injury exposures, whatever, in Ohio. And so my rate in Ohio is ridiculously low. And I'm not bragging, it's just a matter of good fortune that the right things fell together. Our exposures where there's been a lot of claims have been in the other states, and we've had to pay dearly for it.
You mentioned something I'm curious. When someone's buying routes, typically you either do an asset sale or you do a stock sale. So you're either buying the routes as individual things and possibly the trucks, but the company doesn't come with it, or you're buying the whole company, right?
Right.
Does the loss history, the experience factor come in both cases, or is it just on the stock sale?
Well, with the stock sale, for sure it does. With the asset sale, again, working with a good agent, do you want do you want that to follow? If a guy had a really good experience rating on everything, accident history, injury history, and everything, if you can get that to follow, that would be beneficial. And again, different states will allow different things. The thing is that I just don't want somebody that's buying an operation somewhere think, well, okay, I'm going to start out with a 1 as my work comp modification and find out because they dovetailed something in, even if it was an asset sale, that you now have a higher exposure because of previous. Because like when I bought into Ohio, and it was a asset sale, not a stock sale, when I purchased that operation over there, the work comp history followed me, but nothing else. The liability, the non-trucking liability, physical damage, none of that followed me. The only thing that I had to deal with was having a good work comp history.
Now, for these insurances, I don't have any experience buying these things personally, but I do buy insurance for myself, auto and home and whatnot. Is it the case where you can move the slider a bit in terms of the overall limits as well as the deductibles and see how that affects premiums?
Well, there's some things, like for example, I think FedEx is still hanging on that they want you to have $1,000 deductible on your physical damage. And that's an argument point on my case. I would prefer having a $2,500 deductible because, I mean, you can hardly do anything to a truck today and have it be under $1,000. And so there's a lot of times if I have a claim that's $1,200, $1,400, $1,500, we just pay it ourselves, because why would you turn it into the insurance company for $500? And because it's $1,500, they're going to take the deductible against it. If you're nickel diming the insurance company, they're not going to go broke with those $500 claims. But they look at, oh, look, you had 10 events, you had 8 events, you had 17 events last year. There's minor things you just go ahead and pay on your own. And so, yeah, I think on non-trucking liability, and this may have changed, but I always go with the highest limit. I think at one point FedEx was that you had to have $1 million, or you could buy it up to $2 million. And the thing is that extra million in most cases in insurance is just a few bucks. If it's $35 a month for $1 million, it's $38 a month for $2 million. I'm just using that as an example, but it's very inexpensive to go to the higher level.
And if I wanted to see FedEx minimums, would I find all of that in my contract?
Yes.
Okay. So there's a section in the contract where I'd read that carefully, show it to
Right.
my insurance agent, and they'd be able to make heads or tails of that.
Yes, hopefully.
In my experience, as an example with auto, I have found that the insurance companies have this business model where they know that insurance is a very sticky business. So they'll when you're getting a quote for new business, they will be very aggressive and competitive. But then somehow or another, over the next 3-4 years on my auto, I'm going through this right now, I've experienced like 12% increases with no speeding tickets, no whatever, and it just creeps high very quickly. Is insurance the kind of thing that you have to spend the time to go shop it every 2-3 years to make sure you're getting a fair price?
Well, I think it's good to know what's going on in the market, but I can tell you physical damage insurance, unless something strange has happened recently, physical damage insurance is based on a percentage of the value of your truck. And boy, go back to 35 years ago, as a part-time deal, I did sell truck insurance. So I know just enough to be dangerous on the sales side, let's put it that way. But let's, for example, if the insurance coverage rate for physical damage is 3%, you've got a truck that's worth $100,000. Well, it's going to cost you $3,000 a year. So divide that by 12, it's going to cost you $250 a month. And that's, so when you get your quote, when I get my renewal quote from my agent, he'll tell me what the dollars are, and I'll say, I want to know what the physical damage rate is. It's 2.6%, 2.8, whatever. And because, like when you say compare dollars for dollars, that's a good thing to do. But how, somebody else that raised this, yeah, well, we had we valued your trucks higher. See, we're in kind of a subject here a little bit. But with this inflationary times that we're in right now, it used to be that, yeah, you bought a truck for, say, $150,000. Well, after a year or two, the value of that truck might only be worth $100,000. If you're still insuring its value, you have to declare a value on these trucks when you get them insured. If you kept it at 150 and it's only worth 100, you paid for $50,000 worth of coverage that you're not going to get reimbursed for, because the letters are ACV. Actual cash value. But right now we're experiencing inflation. I've got trucks that I bought for $135,000 4 years ago, and last year they probably would have gone for $50,000. I sold one of them for $90,000. So if you wreck one of those trucks today, if that $90,000 truck, if I had lowered the premium or lowered the value to $60,000, I'm paying less premium. I would have only got $60,000. Well, yeah, if I owe the bank 40 and I got 60, I'm still money ahead. But I did not get you get the actual cash value up to the value that you've declared. So one thing is, And I've got to keep in mind to practice what you preach, but every month you should look at your values of your trucks and just say, am I insuring this for the right amount of money?
So let me make sure I understood that. You got a used truck that was worth 100 grand and you're insuring it for 150. The truck gets totaled. You're still only getting 100 grand, even though you had insurance for 150.
That's right.
But if you had that used truck that was worth 100 and you only insured it for 60 and you total it, you're only getting 60.
Right.
And how do you determine the actual cash value? Do you have a Kelly Blue Book place where you can go in and put the make, model, and the miles and get a market price on it?
Yeah, I have a friend that's in the used sales business, and I don't give him the whole list of 35 trucks and say rate these for me or whatever, but just hey, Joe, where's the market today on used trucks, and we'll talk about it. And I'll see if very rare that I go up. What has happened this last year is that I just haven't been lowering them. If I bought a truck for 140 last year, I'm still insuring it now for 140, where in prior years I would have lowered it. But that same truck I bought last year for 140, if I was going to buy it this year, if I could get one, it would be 160.
And so, okay, I'm following you. And you said monthly you can update this with your insurance company and have your premium adjusted?
Yep.
So you just send them a spreadsheet and say, here's my truck VINs and here's what I want to insure them for, and they'll change it in the computer?
Yeah, the clerk or the agent in the office may not like it, but that's the way it goes.
Sure. But you can raise them too if the truck costs are going up.
Yeah, you could. Yeah. The thing is that when you raise the values, it's well, then let's just, let's insure all the trucks for 200,000. No, you're going to get paid the actual cash value. So you got to be a little bit smart, a little bit savvy on, figuring out what these are worth. Hopefully, and we don't want to lose a truck. The last thing is, hey, I'm going to make money when I wreck the truck. I don't want to wreck a truck. But if you do, you want to be able to come out whole enough so that when you have to buy its replacement, that you're not really getting hurt bad. One of the worst things that you could do, and this happened to me when I was first starting my business, you have some trucks wear out and you had it financed and you go buy another truck, and they will gladly take the balance that you have in your old note and roll that into the new one. And being upside down on a house is bad enough, but being upside down on a truck that's a depreciating asset, that really is bad. And you got to be careful that you don't have that. Well, today that's not the example, but this inflation thing that we're in right now is not going to last forever.
Meaning prices are going to come down, or prices?
Yeah, I got a lease extension on a truck yesterday for a truck that's a 2019 model year, single axle day cab. So it's just a plain basic truck. They're determining that's what's the cost basis to determine the lease payment is $51,000. Well, I've got identical trucks to that I was going to sell last year for $20,000, and I never did sell them. Well, this tells me if I want to sell them this year, I could get 51 for them. So if somebody came along and said, hey, I got a deal for you for 45,000. And so, the market is up. But as soon as this changes and the market goes back down, the values are going to be, the problem is my lease contract is going to be based on that amount of money. And it's only an extension. It's for 12 months and the truck's going to go away. But my caution, and I get a lot of phone calls from Steve, I'd like to start my own company. Steve, what do I do about this? If you go buy a used truck, there's used trucks that are really wore out that are $75,000. And when this thing comes back down and you're still making truck payments at $75,000 and the rates have come back down and the values have come back down, it's going to hurt. It's going to be an impact on us, just like 2008 was for the real estate. A lot of people bought $200,000 houses that went for $80,000 at auction.
Well, this is the conundrum. This is like Warren Buffett says, price is what you pay, value is what you get.
Right.
And these days, prices are way high compared to value, but in order to operate, guys need trucks.
Right. Well, and I guess it goes back to how do you determine value? And good question. But if you have, and maybe this is outside the FedEx world or whatever, but the rates are ridiculously high on the open market right now. So if you took that truck that you paid a high price for, but you can go generate tons and tons and tons of revenue with it while you're getting value out of it. One of the things that's, kind of again, going back to the FedEx example, because we're not paying for primary liability and cargo, and they're doing all the billing and whatnot. I've heard people say that our contract at FedEx Ground, they call it trucking light. We're in the trucking business, but we don't have to go buy a building. We don't have to go find the customers, have the primary insurance and all that. So we have kind of a lightweight version of that. If you could buy a truck and you know that, hey, I can get more utilization out of this truck, that's that's one of the things together. That's how you determine, or not so much even to determine it, but that's how you go out and acquire additional value. But to just have a basic run and overpay for a truck, you're going to pay sooner or later.
I don't know if you can do this, but with the 7 or 8 things we talked about, do you have a ballpark number of what you think insurance, those 7 or 8 insurances, should cost you per truck per year?
Well, the primary liability and cargo, let's not address, because if I would go out and, if I go out and get my own authority, it's going to be based on I'm a small operator versus you got volume discount, everything like that. Non-trucking liability, well, hold on, I got my bill. It's just coincidence. This just happened to be, I just printed this out yesterday for our March bill. I'm paying $35.78 a month for my non-trucking liability.
Per truck.
Per truck.
Okay.
And then I've got the premiums for the physical damage, and $237, $184, $184, $233, $285, $110, $109. So $291 all over the board.
Monthly per truck.
Monthly, right.
Okay. And
so, but again, going back to what I know from the days when I used to sell insurance, physical damage insurance should not cost you more than 3% of the value of the truck. I think the rate that my agent has me at is 2.6, 2.8. So if there's one thing that the people that are watching this can have as a takeaway, talk to your agent about the rate that determines your physical damage, because that's the biggie. And work comp is determined by the state and your modification rate.
Does physical damage get affected by whether you've had accidents recently?
Oh, yes. Yeah,
Okay.
there'll be a surcharge if you've had too many accidents. We had a struggle a couple of years ago, almost to the point where they weren't sure they wanted to renew my coverage. But the reason was we were hitting deer right and left. I mean, we're in the Missouri in the hills, and it's there's no snow in November, and there's all the hunters out there, and so that chases all the deer out of the highway. I mean, it's not like we were running into cars and school buses and things like that, but we had, I don't know, close to between $80,000 and $100,000 in claims for all the deer that we hit. And this goes with insurance. What I've done is I've equipped. You've seen some of the trucks that have those cattle guards on the front.
Yeah,
they're
deer
$1,500,
right?
Deer guard, cattle guard, whatever you want to call them. They are about $1,500, and they're well worth it. Now it cost me the $1,500, but when I hit a deer, some of the time you just knock the deer off the road and you haven't really hurt the deer guard that much. Even if you damage the deer guard so bad they had to replace it, you're replacing it for $1,500. Well, again, to me, it's not worth it to turn in a claim to the insurance company. But if I don't have the deer guard, we had a lady that drove for us a few years ago, hit a deer. It was $10,000 damage. Yes, the insurance company paid $9,000, and I only paid $1,000. The truck was in the shop 5 weeks. So for 5 weeks, I had to get a rental at $750 a week or whatever it was. And today, you can't even find a rental truck in a lot of cases. And so, there's a case of, that's a whole nother topic, is risk management, claims mitigation, whatever you want to call it. But that $1,300 to $1,500 investment for the deer guard, totally worth it. But if you got 50 trucks, you're spending a lot of money.
Do any of these insurance cover rentals as part of property damage?
There are some, and they have a lot of different provisions in there. And see, and anything that you get as a, hey, we cover this. Yeah, well, they're not covering anything for free. In the world of insurance, there's nothing free. The premium is buried into something.
If I have a full service lease from a company, I don't know who, Ryder, REL, whoever, right? Is any of this insurance covered by them as part of the lease cost?
Well, you can buy your insurance through them. That's one thing. Like when I have some Ryder leases, and I have to be able to show them that I'm leased to FedEx, because one of the requirements, again, you start with the basics. I'm going to go to Ryder and lease a truck, and they say, fine, give me a certificate of insurance for your primary liability. I'm sorry, I don't have primary liability. Well, we're not going to lease you a truck. Well, no, wait, I'm leased to FedEx. Here's a copy of the contract, whatever. Well, then they know that they're, because Ryder doesn't want to have a claim when you run into a car and have an injury or a fatality or something like that. They don't want it coming back to them. So they have all their requirements. They got a checklist. You have to go through it. And if you don't provide them with a certificate of insurance for physical damage, they'll go ahead and cover it for you. But they're not going to cover it at 3%. You're probably going to be paying like 5% or 6%. Those numbers I was saying earlier, were between $150 and $200, $300. If I don't cover their truck, it's like $600 a month.
Got it. Okay. And I know that safety is obviously critically important to FedEx for lots of reasons. Does safety come into your safety program, your training, your record, those kinds of things? Does that come into play in terms of insurance rating and premiums?
Yes, and the two agents and the two, or I guess it's just one agent actually, but I have all my, like the non-trucking liability and physical damage, general liability is with one company, work comp is with another company. Both of those companies have safety specialists. They come in, and when I say come in, it's a Zoom meeting now, but they want to see what is your safety program, what is your records, what is your history, and if you've been a decent citizen and not having a bunch of trouble, your rates are going to be better. But in addition to that, you want to be covering yourself, that you don't want to get to next year. I mean, if you get down to where it's 30 days from your expiration date and they say, Richie, no, sorry, we're not going to cover you. Now you're scrambling to find a new agent, a new company to cover you. Well, why are you waiting until the last minute? What's your history and all that? So safety does play into it. And a self-imposed rule that I have is 60 days before the renewal, I want some information from my agent. The companies love to wait until the last minute. And I've gotten down to tell them that if I don't have your renewal quote by 30 days before the expiration date, you're out of the running, and I'm going to go find somebody else. Because I don't want to get down to my insurance expires, say October 1st, 28th of September, you're like, oh man, do I have coverage?
When you talk about those safety things in those Zoom meetings, do the insurance companies add any value by providing boilerplate safety programs and guidelines and procedures or anything like that? Or are you on your own to figure all that out?
No, they do provide some, safety manuals, safety tips, training tips. One in particular, we've had this now with 2 work comp companies. You have an employee gets hurt and he can't work, he's on disability. Well, if if he was making $1,000 a week and it pays 2/3 or 60%, so he's either getting 600 or 660, whatever it is per week from the insurance company. Well, one of the things that you can do is put him on light duty work. Well, we don't have light duty work. What they will do is they'll find a nonprofit, and if the guy can sit and move papers from this basket to that basket, yeah, you might have to pay him $20 an hour, but if you pay that, it reduces your, disability claim. Just the stuff that could be ongoing. A tip too, and then please ask your agent about this. But we have been advised on some claims where we turn it. This is work comp. We turn it in as medical only. So meaning that there's going to be nothing with disability or anything like that. We had a guy get hurt, fall on the ice, and if he's going to have any medical coverage or anything like that, we want to be able to take care of it. But what ended up happening is it was so minor, we paid for his trip to urgent care out of our own pocket. There was no disability. He was out of work for 3 days. I paid him a reduced rate for being out of work, and there was no claim involved, so there's no experience. Because what'll happen when you file a work comp claim, or when not even a claim, you just notify them, hey, we had a guy get hurt. They set aside, well, this is a $25,000 event. This is a $50,000 event. That goes against your experience modification. And even if you didn't send anything in, it cost nothing. They still have this $50,000 exposure sitting out there. So, and it's tough. These things that I'm sharing, I'm still learning. Every time I talk to an insurance specialist, I learn something. That it's not that it's underhanded, it's against the law. I'm not going to recommend anybody commit insurance fraud to try to take money. That's not the purpose of these conversations. But you have to know the processes, the procedures, and you're not going to learn it in 45 minutes. You're not even going to learn it in 45 days. It's an ongoing self-education about insurance in business, not just trucking, but especially trucking, I would say, because that's our field.
So it's not like me with my auto insurance. I get a thing once a year, and that's the last time I think about it.
Right.
Okay.
Well, in our case, we have a renewal every year, but you want to be managing your risk, managing your exposure all the time.
Steve, we're starting to push close to our allotted time. What are some of the things I've forgotten to ask you that you think are important? Anything?
I guess one thing that I would just add, it's not so much that you have forgotten or whatever, is for the new contractor, FedEx has said, okay, we're going to give you these routes, go get insurance. You're kind of like, and they'll tell you go to Marsh. Well, Marsh knows the process. They know exactly what FedEx wants. And so if you go to them, you'll get coverage. But there's competitors out there that you can go to, and FedEx is not going to tell you who those competitors are. So whether they contact you, contact me, we might be able to provide a list. I'm not here to endorse or push any one particular agent. One of the things that I've heard people complain, though, is that I got my renewal with company A, and now that I have it, and then the renewal, let's say, was March 1st. Well, I see now that I'm paying this amount of money and I want to cancel. These insurances are written as 1-year contracts, so there is a early termination penalty. So don't get caught with that. If you're going to change insurance companies, change on the anniversary date, or have it where you can reduce coverages, whatever. But if you do take a short-term penalty, it's at a reduced premium, not based on your whole big, large premium. So if you need to change insurance companies, do it before the anniversary date.
So that's different than my experience with homeowners and other things, where when you cancel, you just get your prorated premium back.
Right. Well, and again, as because it's private insurance, whatever you want to call it, we've got consumer protection acts that are, protecting, John Doe and Susie Q and whatever. But in the commercial insurance world, there are short-term, they call it it's earned premium. So like, for example, if you have a policy that's $12,000 a year, there it's $1,000 a month, and even right down to how much is the premium per day. So if you cancel your insurance after 6 months, there's $6,000 of coverage they should have gotten. They're not going to bill you for $6,000, but they have a formula that is that you're still going to pay a significant amount. I can't tell you what, because each company is going to be different. So you have to know what you're doing there. Yeah, and so if your renewal is October 1st, I really think you need to start shopping your insurance July 1st. You got to start shopping it at least 60 days in advance. 90 would be better.
Okay. Steve, thank you as always for being so generous with your time and your insight and expertise.
Glad to share.
I'm hoping that others found this as fascinating. I mean, I know it's insurance, so it's not fascinating, but if you have to have it, you need to do it correctly, right? And it's going to take a bite out of your hide in terms of your P&L. So you need to do it intelligently and try to do it cost effectively. We didn't really talk about the pros and cons of lower insurance, lower premiums, and then the risk you take on, but I'm sure any agent ought to be able to discuss that intelligently with them.
Right.
Before we wrap up, Steve, if you don't mind, I just want to mention to everybody, Facebook group, FedEx Ground Linehaul Contractors. It's got almost 500 people with great conversations going, everything from how do I do this and have you heard that to routes for sale, trucks for sale. It's a great community. If you're not on it, please jump on there. The Linehaul Summit this July, Steve and I will be there. It should be a fantastic opportunity to meet with vendors, to meet with other contractors, and to learn by drinking from a fire hydrant. I mean, there's going to be about 20 something educational sessions plus vendor presentations and an expo, July 21, 22, linehaulsummit.com. If you want to listen to these things, but you don't have time to watch videos, we do have a podcast. So there'll be a link underneath if you want to be able to get to that via podcast and listen while you're driving. We've set that up. And last but not least, I've been told by a number of people, I'm doing a disservice by not saying what Haldy Tech is. We're a software company that caters just to the linehaul community. Somebody mentioned to me the other day that running a linehaul business without using our software is like driving at night without headlights. I'm very flattered by that. And but we try to help you find money that FedEx didn't pay you, find ways to save in your operation and save time also. So we try to go straight to your bottom line. And if you'd like to see what it can do for you, I'm happy to set up a time to give you a tour of it. Not a sales pitch, just let you see it and give you a free trial so you can kick the tires. So thank you, everyone. And again, if you've got any feedback, good or bad, we would love to hear it so we can make these things better for you every time. Steve, it's awesome having you as always.
When I have one thing that I could add for the people out here, if you're an existing contractor or becoming a FedEx contractor, the best thing that you can do is attend the summit in July. The next best thing that you could do is bring your key person, because I'm only as smart as my team is. And so yeah, this sounds like a plug, but I'm bringing some people with me because I want them to learn things that either I don't know, or if and when the time comes that I'm not around, that they're able to sustain the business and answer the questions. 50 years from now, I ain't going to be around. Somebody still has to answer these same questions. So bring your team.
Yep, absolutely. It should be there's tracks for managers, tracks for owners, track for HR and admin. And there's even a track that is being set up right now for new contractors or prospective contractors, folks who are brand new to the business. So it should be a very good event.
It'll be fun. Looking forward to seeing you there.
Likewise. Thank you, everyone, for tuning in. And we'll be back soon with part 5 in the series.
Goodbye.